Bloomberg Audio Studios.
Podcasts, radio, news.
Well, we love talking shipping and logistics. After all, understanding who's shipping where and how much they're shipping is key to understanding trade and the global economy. Our next guest has a great read into that. Greg Hewitt is CEO at DHL Express US. It's a segment of Deutsche Post DHL Group, one of the biggest private employers in the world. They've got more than 550,000 employees, revenues of more than $87 billion just last year. Greg's here in the Bloomberg Interactive Brokers studio.
So great to have you here. We do. Tim and I love talking to anybody and everybody who is involved in transportation because it does feel like you guys do have some great insight into what's going on in the economy. Welcome. Nice to have you here.
Thank you so much for the invite. My pleasure to be here.
So tell us a little bit about the environment, what you're seeing, and the level of activity and how it compares from the last 6 months, from 12 months. I mean, I'm not quite sure with the pandemic still, if we're still thinking about pre-pandemic levels, but what are you seeing?
I think I've seen to start the year, we felt it was going to maybe be a little bit stronger, a little bit more growth. We're coming off of post-pandemic, a bit of a downturn. What we saw was e-commerce was kind of fueling any growth. The traditional segments, automotive, engineering and manufacturing, high tech, were still a little bit lower, maybe having last year a little bit too much inventory, trying to cycle that out. We went into the year with optimism, thinking we closed last year stronger, maybe it was going to grow. Haven't quite seen that in first quarter, seeing it a little bit softer than we thought, but everybody's optimistic. A lot of people are talking about peak season this year, which in air and ocean will come in the summer. For me in Express, it'll come kind of U.S. Thanksgiving to end of year.
Yeah.
People are optimistic that volume will grow and things are recovering.
Okay, you mentioned air and ocean, so I want to just start with ocean. Are you seeing any increase, or is DHL seeing any increase in demand from the ships that are avoiding the Suez Canal? How's that playing out for you?
I think a little less than I thought, quite honest.
Really?
In my segment, usually when there are pinch points in any one of the sectors, like in the ocean transport, maybe people move things over to a fixed network like ours and Express. I haven't really seen that lift yet. I think companies are still being patient. They still have time before the peak to allow things to work themselves through. Where we'll probably see it would be more towards the summer, or for me, fall season. If there continues to be challenges with the supply chain, that's when things start to convert over to air and we'd see a lift in cargo.
Greg, what's the most challenging part of your business right now? I mean, certainly something we talk about is higher energy prices, right? And we've pulled back a little bit off of kind of the activity over the weekend in the Middle East, but I am curious if that's starting to bite into some of your costs or raise that cost equation.
From my perspective, still my biggest challenge is dealing with the inflationary pressures that go with rising wage rates here in the U.S. and the need to compensate my team who are skilled workers to keep the front lines happy. That's probably still my biggest versus anything globally that's putting pressure on.
That's interesting to hear. Where is that pinch point the biggest? Is that with people in warehouses, people actually doing the driving, doing the deliveries?
Exactly.
Or you're not talking back office folks?
No, it would be more frontline, finding the skilled labor for couriers and terminal handling staff.
I mean, who's your competition there? Is it Amazon around the country that's just driving up wages?
I don't know if I would say that it's anybody that's driving it up. I think in general, you've heard coming through the pandemic, every wages, whether it was at a Dunkin' Donuts to a courier, everything goes up.
We talk about California's minimum wage all the time, up to $20 an hour at this point.
And we have to respond to that and make sure that anywhere where we're employing people, not only are we at the minimum wage, but generally because it's skilled labor, we've got to be a bit above that.
Well, one thing, and this is something we talk about when we focus a lot on inflation generally here in the United States. And we were having a conversation earlier with one of our analysts who watches the rate environment. And this kind of debate about whether or not this idea of the Fed getting back to 2% inflation, whether it makes sense anymore, because there does seem like the workforce, that there's just not enough workers that people need, and that maybe a higher wage is something not just short term or until the next wage cycle, but something longer built into kind of our economic model. Do you agree with that, or what's your thinking about wages longer term?
I think from my standpoint, what I'm not seeing is wages don't go down. Once they go up, they tend to hold and grow from that. What we've seen is lower levels of turnover, so we've got stability in the workforce that have gone with the higher wages. So I think that's a good thing. Now we've got to drive productivity in order to make sure that we've got this shareholder return.
So, Carol, this was Carol's idea. She's like, we got to talk drones here. And I'm thinking to myself, okay, well,
How do you make them more productive?
I'm thinking to myself, okay, well, if the folks on the front lines are the ones who are driving up wages, I'm wondering how DHL is experimenting with drones, drone delivery, and if that is actually something that's realistic in terms of supplanting or replacing at any point certain humans who are doing the delivering.
From my perspective, it's not going to supplant humans doing the delivery. In fact, I don't see it. I think the reality is there are challenges around having autonomous vehicles in the air and airspace. We have used it in some remote locations to deliver medicine and such. I think we're still going to need people delivering packages, but with the advantage of automation in terms of software that helps with routing, helps make sure they can be efficient and effective. Those are the things that I see in the near term as more of an impact.
Got to say, and forgive me, I'm going to talk about the competition, but UPS, one of the things after spending, this was a few years back, but spending a day with a delivery man, I mean, it's all technology. And this whole idea of a kid with these, with our team, you don't make left turns, you make right turns because you don't want a truck or driver spending seconds, minutes at an intersection. So things like this do add up.
They absolutely do. And so our biggest investments in technology in the last few years would be around routing, software, and station optimization. And now with international,
station optimization?
Would be what's the optimal amount of courier routes and personnel that you'd have in a station based on big data, the data that tells you what's coming in. How do you allocate that most effectively? And put into that with global trade, clearance, customs clearance. That's probably the next area we're investing heavily in because we need to do that more efficiently, more effectively, more streamlined.
Well, can I ask you what happens there? Is it just takes long?
If you have to clear something formally, you've got an entry writer who has to go through the harmonized tax codes, making sure all of the information is available for customs to clear it effectively and for the duties and taxes to be assigned. It can be a bit of a manual process. So doing things with automation that makes it more accurate, more efficient, more effective is part of our customs clearance experience.
How's air capacity looking at the company right now? Do you have too much air capacity?
I wouldn't say we have too much. I think we probably adjusted coming out of COVID, where we had a lot of charters and extra capacity that balanced out our fixed network, the jets that we've bought. We've now right-sized those. We try to run 80 to 90% capacity utilization and then scale accordingly, and we're running at good levels.
Well, to what extent are you leaning more on third-party capacity providers right now?
I think if I would have said before the pandemic, we were very balanced between our own network and leveraging commercial lift. Through the pandemic, we leaned much heavier on our own network. Now we're probably balancing it out. Before we add maybe another jet into our own fleet, we will look at commercial to balance it out.
So when we started, Greg, it sounded like there was hope that things get a little bit better this year. Do any of your clients talking about slowdown, recession?
Not really. In fact, I would say compared to this time last year where there was a lot of uneasiness, where inventory levels were high and there was a lot of uncertainty, this year when I talk to them, they are optimistic. What I haven't seen is the orders flow through and the moves go through yet. But people
I like
are
what
feeling.
You're saying, but show me the order.
We want to see them, but it gives me optimism that for peak season we'll see a return to more of the norm. We're usually in third and fourth quarter. There's a rise in goods moving that we haven't seen in the last couple of years to the same extent.
Why would a customer go with DHL instead of going with FedEx or UPS?
Well, for me, our DNA and what we were born out of in 1969 is international, and our specialty is around the movement of goods internationally. So if you're a small business or a business bringing goods in from around the world, nobody can clear it and deliver it like we do. If you're a business that looks to market your goods globally, nobody knows those countries and consumers better than us.
Greg, 20 seconds left here because you do see kind of the trade, if you will, going between the U.S. and globally. Any pushback that you see in terms of the globalization idea that we keep hearing in narratives? Just quickly.
Yeah, we definitely have heard concern, a little more protectionist policy in a number of places.
Do you see it, though, in the data?
I haven't seen in the day-to-day. What I have seen is probably the U.S.-China relationship. Definitely China +1, new markets in Asia and Mexico growing because of that.
Yeah, we hear that a lot.
We love talking shipping and logistics.
I told you we would like it. Greg Hewitt, Chief Executive Officer, U.S. of DHL Express, here in studio. Greg, thank you. This is Bloomberg.